Okay, so we could start. Does anyone have any questions prior to me beginning the webinar? Or are we good? So today we're going to go over evening research, the importance of evening research, and how 1 hour a day could really be a game changer for you during the day for the next day. And I'll give a couple points here, just a couple from the webinar that you'll be able to realize by doing evening research just 1 hour a day could really help you a lot for the next day. So why do evening research? Number one is law of reciprocity. Now, for some of you who are students of Alpha 7, you don't have to answer this, but law of reciprocity is basically what goes around comes around, or the work you put into it is the profits you're going to get out of it, okay, in a sense. So a lot of people, they have this misconception or perception that after 4 o'clock is over, hey, I'm done, I made my money, I'm going to close my computer and go get myself a drink and relax for the remaining day. That's it. I don't have to answer to anybody. But in reality, all traders that make profits, they do a lot of work after 4 p.m. All right, most of your setups, most of your trades will probably stem from evening research. And believe it or not, at the end of this webinar, you're going to realize that by actually finding something from yesterday, forming today, and coming together like a puzzle, piece by piece, you get excited for that move to happen because you have that confidence that this move is going to go. It's no way that I found this from yesterday and now it's ready to break out, okay? There is a huge chance and huge probability that it's going to work out. So the work you put into it is the work you're going to get out of it. I think that's the most important rule, and one of the most important rules in trading is that it requires work. Okay, guys? It's not a fairy tale where you could work until 12 o'clock and call it a day. That's not how life works in general. So the next thing is to find potential setups for the next day before it even starts. So we're going to get in a little bit later in how do we look for potential setups for the next day, right? If we're intraday trading, Andy, okay, then the weekly and the monthly and the daily probably aren't really going to help us much, right? For swing trading, they're going to be our most of our biggest charts are going to be the ones we favor. But for intraday trading on the next day, okay, you're going to have to be looking at the smaller time frame. So how could we figure potential setups the day before without even knowing how it's going to open the next day, right? Find food to never starve again. And this is one of our mottos in Alpha 7, is that such as today, like this, a day like this today in trading was very choppy. Price action was pretty slow for the most part. We had a lot of higher highs and lower lows, but they were choppy higher highs and lower lows, so they could easily shake you out. So what you want to do is the day before, by doing evening research, you allow yourself to find stocks with possible setups, okay, and be able to already have a prepared list the day before, getting ready to tackle the next day. And by doing this, it eases your emotional response on trying to find something or strive for something. Or if it's really choppy, you want to get sucked in. But by having some setups created the day before, allows you to kind of relax and wait for the market to come to you. Preparation is key. So I think that goes along with reciprocity and preparation. You know, don't get lazy with it. Get a notepad. Figure out all your bumpers, which we'll get into later, and stuff of that nature. Now, very importantly is build a well thought out alert list of possible setups. And this could be hard. It really depends on the day. But you want to have a separate watch list that was built just for the research that you've done the day before or 2 days before, if it hasn't even broken the next day. And by breaking down your watch list to just this category, you allow yourself to be able to act quicker, okay? And also find possible catalysts to affect the overall market. So you want to look for things that may be news-driven. And things that are news-driven could really help you outperform the market, especially when it's stalling or sideways. Then anything that's really kind of correlating with the overall market isn't going to be helpful. So what you want to do is find stocks that are moving in its own volition. So it's good to plan those as well. And lastly, by doing evening research, you only increase your trading performance. It only helps. All right, guys? So we went through the law of reciprocity. I just want to give you a deeper meaning, and we'll go over the second paragraph. I think I've kind of given you the first paragraph in my own words. So in the markets, this means you attain byproducts that are proportionate to the enduring effort you put in. The key is to make sure that your efforts are accounted for by directing them to the most efficient pipeline. Putting in the mundane work of scanning through charts and researching prospects, reading through earnings reports and conference call transcripts, while measuring price levels and then monitoring them day in and day out is time consuming, but the effort gets rewarded. And I want you guys to test it out for yourself. Do it for a week. 1 hour a day, evening research. I guarantee you'll find some positive trades out of that evening research. Does anybody have questions about law of reciprocity? Okay, so a big question here is, what time frames do you use for evening research, right? You're not going to be using the 1, 5, 15. Anybody could tell me why you won't be using the 1, 5, and 15 for evening research? Maybe someone who wants to participate, get the wheels working over here. Some people are typing, guys. Give it a sec. Need bigger picture. Yeah, those are intraday time frames. Exactly. 1, 5, and 15. If you look at them tonight, I guarantee that they will not look the same tomorrow morning. There's no way to guess what's going to happen on the 1, 5, and 15. What's up, Darcy? So, yeah, Jonah, you were right. You were partially right to get different viewpoints. Judy, you were correct. You need the bigger picture. And Wahid, you hit it right on the nail. So what you want to look at is the last intraday time frame you could look at, the 60-minute, Wahid, right? Because sometimes that could really provide some good foreshadowing abilities. But most of all, you want the daily, weekly, and monthly. So we want to use, when you're gonna be doing evening research, you want to have a whole different layout for your trading platform. You want to only have the 60-minute, the daily, the weekly, and the monthly. All right, and you probably want to have the same thing for SPYs and the overall market, so that way you could kind of compare to the correlation between the overall market and the equity that you've chosen to do research on. And as we look at the wider time frames, we're going to try to look for stocks that are nearing specific strategies. Now, at this point, I want to stop for a second and let you guys know that use your imagination a little bit. I can't really go over our setups, Alpha 7 setups, but any setups that you do, any of your strategies, all the people that are in here, if you take the strategy that you use and you implement it with the wider time frames, it's going to work when they align with the shorter time frames, okay? This is called laws of linearity. And for those of you who've been in my webinars before, you already know what laws of linearity is. So by knowing that any of your setups that work on the shorter time frames could work on the longer time frames and vice versa. Okay, Andy? So if you find a long-term setup, okay, on the daily, let's say, Andy, okay, then what you could do is you could use that the next day to align with the shorter time frame. And what this is going to allow you to do is to be able to really get into a sniper viewpoint of where you want to enter, starting from the shorter time frame all the way leading to the wider time frames. Does that make sense, Andy? All right. So you want to use the wider time frames. Now, the two time frames that I really want to go over here is the 60-minute and the daily, because they really coincide with each other in a lot of ways. So the 60-minute characteristics that you want to take note of is that it's the largest active intraday time frame that sets the tone of the playing field. Okay, stronger bumpers to pay attention to. Now, what bumpers mean, guys, is basically your moving averages, your Bollinger Bands, whatever technicals you use. Those are called bumpers because they are reaction points. All right, and if at any point, guys, please stop me. No one has asked me a question yet. I'm surprised. Intraday swing traders tool for the macro trend. Okay, and has foreshadowing ability. Now, what foreshadowing ability means is basically that if you could find the setup on the 60-minute, okay, that could provide a foreshadowing window into a move, an impending move that's going to happen on a shorter time frame quicker, okay, or it's going to start off on a shorter time frame and then continue to react into the 60. Okay, but by seeing the 60-minute time frame setup, you're able to already focus your energy on something that is aligning into its direction of that breakout. Does everyone understand that? Anyone have questions on the foreshadowing ability? I think it's important to know that. Okay. And the last thing you want to know is that the 20-cent coil rule applies. And what this basically means is that because it's a wide time frame and the price range is wide, you want to give a plus and minus 20 cents off any bumpers or technicals that you use as reaction levels, okay, because the time frame is so wide. Now, the reason why the daily chart ties in here is because the most important thing to know is if you're going to use a daily time frame setup, doesn't matter if you're using my setups, your setups, any type of setup, you want the 60-minute to converge in the same direction. And what we mean by converging is that the stochastics, or the overall direction of the stock, should be up not only on the 60-minute or on the daily, it should be on both. Only when they are moving together in sync, okay, can you take a setup off the daily chart. Does that make sense to everyone? And the reason being, I'm not going to go deep into it, is because convergence plays a very big part in the probability of whether your move is going to work, go your way, or go against your way. Okay, because if it's not going to converge, then it's going to diverge. All right, and then this becomes the swing trader's primary signals on the daily. Now, scanning stocks. So this is a great question. A lot of people, when they come into my chat room or when they first start off, they say, where do I begin? How do I pick stocks? What stocks should I be looking at on the evening research? And what I like to tell them, the first thing you want to do is use the stocks that you've been watching and have been playing for quite some time, maybe 2 months or so. Okay, go back. Most of you should have a journal as well. You go back 2 months, look at all the symbols that you've traded and you've done well on, and start researching those. That you could start off a watch list such as that. And then whatever starts to look good, okay, you mark it and you put out an alert and you put it in your either in an Excel sheet or you put it in a notepad and you mark these certain alert points where it's getting near a certain breakout, breakdown, or any other reversal or setup that you guys may be using, okay? The next thing you want to do is you could scan after hour earnings of today. Let's say today we're looking at, we're doing evening research today. Then what I want to do is look at the most popular after hour earnings that have happened. And what I'm going to do is I'm going to see how that looks on the wider time frame and see if I could find anything that's really near a breaking point. And if I do, that's something I'll put on my watch list. Lastly, I'm also going to look at pre-market earnings, right? Because I want to get a figure of which popular pre-market earnings are going to hit and whether they have any big signals that are going to show on the wider time frames. Next, you could use finviz.com. Alpha 7 Trading, most of the people in the chat room, they use the major news section in finviz. And the reason being is usually they're going to have some sort of catalyst where it allows the stock to move in its own volition, regardless of the overall market direction. And you want to make sure that these stocks that you're looking at are converging on wider time frames. So let me give you an example. Would you say, let's say the 60-minute direction trend is going down, the daily trend is going up, the weekly trend is going down, and the monthly trend is going up. So we got one up, one down, one up, one down, right? Would you say there's convergence between those 4 different time frames or divergence? What do you guys say? Convergence or divergence? Divergence, right? It's like tipping a scale, right? We got 4 charts, right? So if 2 are going up, 2 are going down, we kind of even balanced here. And that isn't even enough, right? Because that's going to cause choppiness. We have 2 time frames going up, we got 2 time frames going down. The market is not in a the stock, I should say, is not in a healthy state of mind. However, if you have the 60-minute up, daily up, weekly up, but monthly down, what do we have then? Convergence or divergence? Convergence. Good. So, and that's just the basic part of it. All right, guys. It goes a lot deeper than that I can't really get into because I could talk all day about convergence and divergence. So next, we're actually going to go over to how to find simple chart pattern setups, right, that we can add. So the first thing you should be looking for are popular chart patterns, such as cup and handles, ascending triangles, descending triangles, head and shoulders. Sometimes you could find them on multiple chart patterns. So you could find, for instance, a descending triangle on the hourly, and you could also find a head and shoulders on the daily. Okay, and if you see those happening at the same time simultaneously, does that decrease your odds of a good move or increase your odds of a good move, guys? Increase, right? So what I'm trying to teach you here, guys, is I'm not trying to tell you, hey, just use a descending triangle and make a trade off that. No. You use these practical chart pattern setups or candle pattern setups on top of your normal strategy setups. So for instance, we have a reversal setup called market structures. Okay, so if I see a descending triangle and a head and shoulders, or maybe an inverse pup, then I may consider taking it, because not only do I have my regular setup that I'm usually used to getting into, but I also have a descending triangle increasing my odds for that move. Okay, so that's what I want you guys to take from here. And of course, the more time frames that have it simultaneously, the better it's going to move. And your strategies should be implemented with evening research using chart patterns as an addition, like I said. All right, so we'll go over some examples. So an ascending triangle. So very simple, an ascending triangle involves 2 types of trend lines. Well, 2 types of lines. It involves a trend line and it involves a support or resistance line. Depending whether the trend line is sloping up or down, gives you the name of ascending or descending. So if the trend line is sloping downwards, is that ascending or descending? I think you guys should know that, right? Now, a lot of people don't know this, so I'm handing out a couple secrets here from Alpha 7. The one thing you want to know is that descending triangles and ascending triangles usually break out in the direction as they started to form. So let me ask you guys, what direction did the ascending triangle start to form? Upwards or downwards? Upwards, right? Now the next thing you need to know is that you need at least 3 bounces on the upside and the downside. Okay, so the reason for that is you want them to test, right? The more they test, the better it's going to be. All right, for the most part. Now, targets. So what are targets? Targets are actually calculated by taking the low of the beginning of the ascending triangle to the high. Whatever price range is that, you add it to the top, and that's going to be your normalized target. All right, guys? And can anyone guess what your stop will be? I mean, it's on the screen, but, you know, it's the trend line, okay? So as you go higher, the trend line will continue to go higher as well. So if you want to continue to take it higher, you can. Now, cup and handle. So cup and handle, this, hold on, daily bearish chart, intraday sell off the back, forming bull flag, normally fails. So this pattern looks like a U shape as it hides. I think you guys know what a cup and handle is. A couple things that I want to mention here is that you're going to have sort of a bull flag, okay, once it reaches or tests the high again for the second time. And what we normally do here for targets, okay, is you go from the bottom of here to the top, and then you add it also for your targets. Now, Andy, I just want to let you know that we don't get into them simply off of the chart patterns. We use them as an addition to strengthen our setups. So you don't want to be just trading them solely on themselves. Head and shoulders is another pattern you guys could use. All right. That is also pretty powerful for the wider time frames, and something that you could also add for setups such as continuation, breakouts or breakdowns, or even reversals, okay, after they finish. So the most important thing here is when to execute, right? We did all our research, we put all our setups, we outlined our entries and exits if they were to actually execute. Okay, now just because we have our entries and exits on the wider time frames does not mean that the next day, right when it hits your entry or your alert, you should get in. Okay, you should not do that. You should stay away from that. You actually want to continue to see the stock on the smaller time frames to agree with what you saw yesterday. And this is very important because this is what follows laws of linearity and laws of foreshadowing. And if you could align them together, then you know and you could be confident that this move is going to hit pretty nicely. Okay? And this also, I want to let you know, is a very good tool to eliminate fake outs. Most people don't know when is a fake out, when it isn't. One good way is to allow all the time frames to kind of align. And once they finally align and the 1 minute provides a solid entry, then, only then, will the wider time frames detonate. Okay, and think about it. The daily, right, is a wider time frame, so the setup that you see on the daily is going to take longer to form, and it's going to have a wider price range. While the 1 minute is going to take shorter to form, okay, and it's going to have a smaller price range. So what you do is you start off the 1 minute, and then as it continues to go down, you widen up to the wider time frames. Okay, but you need the 1 minute to be able to detonate the daily or the hourly or the weekly move. It's almost as a domino effect. So next we'll go over, I'm going to show you basically an evening research that I recorded for you guys. I only looked at one stock, finding setups, and then we're going to see how by finding that setup the day before and how it aligned the next day. All right, guys, tell me if you guys see this fine. You guys see this okay? You want me to make it big screen? Everybody see this okay? Okay, all right. So, obviously this is recorded. I've sped it up because we don't want to deal here. So what we're looking at here is a possible, let me see if I could pause this. No, I can't. Okay. Give it a sec, guys. So I'm going to start it over and I'm going to show you something. So the day before, we're looking at, you're going to see me switch this from the hourly, daily, weekly, and monthly. Now, the reason I started off with CVX is because I was doing evening research and then I found this for us to do. So easily we could see that there's a huge simultaneous breakdown forming, okay? We have something that we call a 1 minute inverse pup or trend continuation downwards. There's support that's been here and we have the stochastics ready to cross down the next day. We also have something which we call a mini inverse pup forming on the weekly. So not only do I see a setup on the daily, but I also have a setup that I see on the weekly as well as the monthly. Okay? And as you can see, I'm going to be setting up alerts, trend lines, things that I want to be able to follow through for the next day. Now, does everyone see how there could be a simultaneous breakdown on multiple time frames? Do you guys see convergence or divergence in CVX? And this is the time to ask questions, guys, because this is recorded and I'm just going off of this, giving commentary. Convergence, yes. Okay, we got the daily ready to cross down. It's been holding the 15 MA without breaking it. We have the weekly 5 MA sloping down. Not really divergence, more convergence. The hourly is going down. Daily looks like it wants to go down. Weekly is going down already, and the monthly is going down as well. So for the wider time frames, we would have convergence. And as you can see here, I'm putting up all the alerts so you guys could get a figure of how I see these setups. All right. Now, you can see that the same price, the breakout point, okay, at each time frame is typically the same. Do you guys see that? What's the price? 98.81. Okay? 98.81. I have a setup with the breakout formation below 98.81 on the monthly. I have a weekly 99.81. And here's the next day, guys. So now we have the 1 minute, we have the 5 minute. I pushed all the way back. We could see now that the 5 minute has rejected the middle Bollinger Band. And look at this, guys. Look at the hourly. Hourly is forming now, and look at the daily. Do you see how the daily is still forming in our direction the next day? Fluidly? Do we see how it's coming down to our point that we found yesterday? Anybody have questions on this? Okay, so as we're getting nearer, we see that it's providing us with a little bit of a different price move. 98.85s for the smaller time frames. And this is why it's good to align with the shorter time frames, because now not only do I have setups on the wider time frames, I have a setup forming on the 1 minute, I have a setup forming on the 5, and boom. All right, so it's triggered. We're in. Now, I didn't have to look at this all day long. I just had to wait until finally it was coming to the price. Now, at this point, what you do is you used the shorter time frames to continue down the trend. And as it continues to go down deeper, you stay away from the shorter time frames and you start to only look at the wider time frames. So let's see how this delves in a little bit. Anybody have questions so far about this setup? Evening research the next day? What kind of setup? A particular setup? Or just any setup in general? I can't give you that one, Andy. But what I can tell you from this is it's called a trend continuation. Okay, Andy? Basically, look what happened here, Andy. Um, from here, from where my mouse is, we had a trend down, right? You see that, Andy? And then what happened is once the trend died out, it flattened. Okay, it settled. And then what happened is it couldn't break the middle Bollinger Band, but what did it decide to do? It decided to come down and break below its prior low trend, which is basically a trend continuation. So guys, now you could see that I've been using the middle Bollinger Band on the 1 minute as my trailing stop. And we're taking this down. Okay? Not yet. Not yet, since after this inverse pup has made, has it broken the 5 MA. And on the 5 minute, can anyone tell me, has it broken the 5 MA on the 5 minute? Not once. All right, so this is basically showing you strength, okay, within this move. And not only that, but the 15 is also holding the 5 trending down, and the hourly and the daily. Finally, the daily is starting to actually expand and ignite, okay? But you needed the smaller time frames, okay, in order to know when the daily was going to ignite. Because if you don't do that, you could easily get sucked in and get into chop. And then you're going to get stopped out, and then it's going to come down huge. So as you can see, as we're going deeper into the price, I stay away now from the bumpers of the 1 minute, and I go to the 5 minute middle Bollinger Band. All right, and as the 5 minute middle Bollinger Band comes, I'm going to continue to take it down. All right, probably till the end of the day, which is what happened. And for those of you who want, this is, what date is this? I don't have the date on hand. Let me see. I think it's the 26th. The 26th of June 26th. Okay, if you look at June 26th, look at June 28th, June 30th, and look at the daily, and you can see that it even goes lower beyond 98.30s, and it continues to hold the 5 MA on the daily and the weekly, continuing to go down for a lot of money. All right, and this is your way to delve into a stock from a scalp all the way to a swing. All right, and how to prepare for setups the day before, so that way you don't have to scurry around looking for setups right away in the now, okay? And like I said, it also helps because since you found this setup prior, all right, since you found this setup prior, you have a lot more confidence in the move, and you're not going to have a big negative emotional response to the trade right to begin with. You're actually going to be happy because it almost feels like taking candy from a baby when you find the setup the day before and it actually starts to form the next day and work out, okay? And that's it, guys. That's what I wanted to go over today. I think that's actually a very important topic to go over. It could be a little bit vague sometimes, but I think it's very helpful. You guys should try it out. I dare you to try it. I guarantee it's only going to be beneficial. And I'm ready for questions. Oh, you go to Alpha 7 Trading, go to Education, Events and Webinars, and here it is. Previously recorded webinars. You see it, David? So how does evening news help with gappers? You mean taking gappers the next day? Can you give me a better? I would probably still want to, I mean, what you want to know is, all right, let's say basically, are you talking about a stock, let's say, that had after hour earnings, Nuriel? Yeah, I think so. Absolutely. I mean, evening news, uh, you're not really gonna see the intrinsic value as much after the market closes until the next day. So for gappers and dumpers, unless it was after hours or news the day before, you're probably not going to see much of a gap until the next day. Then what you want to do is only the next day do you look at gappers and dumpers. If they weren't after hours earning reports. Remember, you don't have to look for news much, especially Nuriel. Since you're intraday trading, you don't have to pay much attention to the fundamentals. Only 10% really go into the fundamentals. The rest is price action. Price action and good risk management. Well, there's a lot of websites you could do. Okay, you could do Finviz, Benzinga, Market Watch. Usually they provide most pre and post active market. You could look at that. You could use MadScan. You know me, I use MadScan. But you want to make sure, Nuriel, with gaps that it had a lot of action in pre-market and that the price action has been fluid in the pre-market. Because if it's choppy in the pre-market, you're not going to have much to really go off of. Yeah, for gappers and dumpers, pre-market. You never know what's going to pop up the next day. Any other questions, guys? I'm just chilling here waiting for questions. Yeah, a gap up or a gap down. A gap down is what we call a dumper, Jazz. Gappers or dumpers is what we call them. You deserve to sleep, Jen. You and your naps. Well, it depends. We actually have a couple strategies, Jazz, on gaps. We have something called a gap and go, gap and crap, and dip and rip. All four gaps. So there are three ways we could take a gap, and it all depends on how the gap looks the next day. Occasionally, yes, on the open. If the pre-market it looks good and it's been holding its bumpers, I will take it. You know me. My answer is always if the risk is minimal. Nuriel, just because there was a move on a gap, right, doesn't mean that our strategy was able to catch it all 100% of the time. So I don't want you to think in that perception because it's a very bad perception to think in. That if you missed a trade just because it went down, our setup must have catched it somehow. You know what I mean? So try to steer away from that. the gap and crap, I'll basically give you I'll give you the basics of it, what it's supposed to do. Gap and crap is basically when the gap starts to form, starts to work out, okay? And then it completely fails. So it's here, let me give you, can I draw here? Is there a way I could draw? Give me a sec. There has to be a way to draw. Enable I can enable participants to draw, but for me to draw, no. Huh? Okay, whatever. What could I use as a visual? Okay, I know what to do. All right. So which one do we want to go over? The gap and crap? Oh, well, mark it. That's a good, okay, now I understand your question. So we do not play it unless one of our setups that we have a couple setups. We have pup, mini pup, market structure high, market structure low, perfect storms, plan A's, and such. And what we're looking for is, just because there's a gap and it's going to fill, doesn't mean we're going to get in, okay? We still want to have one of our setups to confirm the entry to go down, okay? Without any of our setups, we never get into anything unless a setup is apparent, okay? If there's no setup being apparent, then we don't get into it just because solely it's a gap. We don't play it that way. Mark, you should actually get a free trial for our chat room if you've never done it before. That way you can kind of get an idea of how we're getting into trades. All right, and you can see that I'm not risky. I'm conservative, and I don't get into many trades. I do options, futures, and equities. Mostly equities, and I call out my setups prior. I give targets prior, and I give stops prior. So there's no BS when I'm actually calling things out. You could take them as if I was taking them. There's nothing in the gray. And I think a couple people, Jen, would you agree to that? David, I think, would agree to that. It's black and white. I don't mess around. What else, guys? Oh, give me a sec, give me a sec. There you guys go. If anyone wants a recording of this webinar, please leave your email now, and you could either private chat it or you could just put it out here, whatever you guys want. And I'll be sure to have it sent to you. Or if you want, you could email me. If you want it to be more discreet, you could just email me and just put subject webinar recording. You know what I mean? And from that, I'll be sure to send it to you.